In this video, we are going to understand the accounting process. Let's see what is the mean by a process. In essence, every process incorporates two things: input and output. A process involves systematically transforming inputs. Inputs mean resources or information or material through a series of organized steps to produce desired output or outcomes. So that is a simple meaning of process. To get the deep understanding of the process, let's we move to practical example. The example is how to prepare orange juice. Preparing orange juice is a process. In that process, we have inputs and a process and an output. Let's see. To get the orange juice as an outcome, we should input fresh orange, water, and sugar as an input to the process. First thing first, wash your orange thoroughly. Now let's cut them into holes. So that is the initial part of the process. Then squeeze the oranges to extract the delightful juice. If you don't have a juicer, no worries, you can always use your hands. Then add our fresh squeezed orange juice into the blender. Next, we will add some water to get that perfect balance of flavor and consistency. For a touch of sweetness, let's add some sugar. Adjust the amount to your liking. Now time to blend it all together. Make sure to blend until you achieve a smooth and frothy texture. And now we have it. Homemade fresh orange juice as the outcome of the process. Look at that vibrant color. Now I think you have better understanding of process. With that, we will move to understand the financial accounting process. As I explained earlier, every process have three steps: input, process, and output. Input, process, and output. In the accounting process, inputs are transactions and events. Transactions and events are the inputs to the process. So then the process starts. You know, in a process, there are series of organized steps. The same thing we can see in the accounting process as well. First step is recognition and measurement of transaction. So then after recognition and measurement, we record the transactions. Recorded transactions move to the classification. So then classified transaction we can summarize. So then the summarized transaction we can interpret. After passing all these organized steps, we can come into the conclusion. That is the outcome of the process. So outcome of the accounting process is financial statements. Financial statements. Next, I'm going to show you how these organized steps replace the real world accounting functions. Let's see. The first one is recognition and measurement, then recording. So, both recognition and measurement and recording, the real world accounting function is recording entries in books of primary entry book. Then classifying. Classifying means the recorded transactions. We classified into assets liability, equity, expense, and income accounts. So that is the classifying part of the process. So then summarizing start. So summarizing mean all the ledger accounts we balance off and get the balances to a summary report. So that summary report we called trial balance. So that is the part of the summarization. So then based on the trial balance, we can go for the interpretations and the outcomes. So outcomes, the financial statements. There are several financial statements we are dealing. The one is income statement, the other one is statement of financial position, and the statement of cash flow, and statement of changes in equity, and accounting policies and notes. Those are the outputs of the accounting process. Those all called financial statements. Thank you. Thank you very much.